Hey everyone, Culture Investor back to another video for today. So in today's video, let's talk about Alibaba. Of course, they reported earnings, they beat on earnings per share and on revenue estimates. The stock rose a little bit pre-market, but then quickly made a fall, and now I think we're just under $90. Now, of course, the story with Alibaba, as with all Chinese stocks, is that, well, as tension rise between the West or the United States and China, the risk becomes bigger and bigger. But let me tell you this, if something does escalate and turns into a WAR, then it's not just Chinese stocks that will get hit, but it's the overall market. Of course, there could be consequences, and worst case scenario, the company gets delisted from the US stock exchange. It's always a possibility. But in this video, I just want to focus on the company, on the business, because it has become much better, and maybe at current prices, it might be attractive to some of you. So we're going to go over all of that in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. If you want to support me even further, do check out the links down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. All right, so first up, we're going to go over the segments here, revenue and adjusted EBITDA margins, then touch on what they mentioned during the earnings call, and a bit more extra information after that, ending with a look at the graph. So first up, revenue. So China commerce just down 1%. There is some explanations with regards to that. So they said during the earnings call, from January to early February of this year, overall sales of online physical goods remained weak, and our China commerce continued to be highly impacted due to COVID cases, as well as people traveling home or to other places during the Spring Festival holidays. But as the influence of COVID cases and the Spring Festival travel subdued in February, especially recovery in categories such as apparel and sports and outdoor as work and life returning to normal, all of our merchants have also expressed their strong desire to get to business. This is very important. We expect this recovery will continue. They touched on this again later on during the call. They say here, we've seen across all merchants is a strong desire to get back to business. They want to have a bumper year in 2023 to make up for everything they lost over the past 3 years. That's certainly a shared hope across the board for all merchants. So that's obviously the view for the overall market as well. Some analysts become a bit more bullish right now as well, seeing that China reopened maybe a bit earlier than expected, seeing how consumers there, merchants want to grow back, well, to make up for all the losses from the past couple of years, which they should thank their government for that. But you could see something positive happening in 2023. And of course, on a year-over-year comparison, would be much easier to do so. Now, circling back here, international commerce saw obviously growth there, so 18% year-over-year. Local consumer services grew 6%. China, I don't know if I'm pronouncing this correctly, but that's basically the logistics side of things. So that grew 27% year-over-year. Adjusted EBITDA change here year-over-year, also pretty positive, 87%. Then for the cloud, not as much growth as you've seen, but when it comes to adjusted EBITDA year-over-year change as a percentage, increased 116%. We now have an adjusted EBITDA margin of just 2%. Remember, there were talks that, well, ByteDance, the parent company of TikTok, was one of the huge clients that is probably migrating away for just the Alibaba cloud to maybe be a bit better regulated by the West. And maybe that's how TikTok won't be banned in the West. Now, when it comes to adjusted EBITDA for China commerce, so the margin there is now 34%. The year-over-year change is just 1%. But there is way more information if we scroll down. So first up, we have China commerce. If you don't know, it's Taobao, Tmall, Taobao Deals, etc. Freshippo. They also have Alibaba Health. We've talked about the various segments of Alibaba in probably one of the first video covering the whole company. So if you want to check that out, it's going to be in the top right corner. But here the margins you can clearly see stayed flat, right? 34% in 2021 and in 2022. But remember, this is still the segment of the business that is being heavily impacted by COVID cases, the reopening or the lack of reopening. So this should become much better in the coming quarters. Now, if we continue here, international commerce, so Lazada, AliExpress, Trendyol, so this is the Turkish company that they've been taking a stake in. Here, you can see that adjusted EBITDA margin went from negative 18% to just now negative 4%. So we're seeing some improvements there. China, the logistics side, we had an adjusted EBITDA margin of negative 1%. We're now at basically 0. So again, some improvements there. And this will all basically translate in a huge generation of free cash flow. Now, before we go into that, there is also the cloud business. Went from 1% adjusted EBITDA margin to 2%, grew revenue 3% year over year, but adjusted EBITDA increased 166%, as we've seen before. And so overall, this is the big picture for this quarter. Just 2% growth year over year across all segments for the 9 months ending. Also just 2% growth there. But if we scroll even further, you can see here, this is the big number I wanted to touch on, and that's free cash flow. Free cash flow for this quarter in USD, $11.8 billion. $11.8 billion of free cash flow generated in just this quarter. And this just shows how profitable the business model of Alibaba actually is. And this is very important. Because first, you always get to see free cash flow. If free cash flow suddenly begins to pile up pretty strong, the overall business will follow. And as we've known, there were some headwinds, well, a lot of headwinds when it comes to Alibaba and the way they operate because of, well, COVID and lockdowns, etc. So to see that free cash flow is already right now at $11.8 billion, I mean, imagine what will happen when the business will be booming in China, when the economy will recover. Of course, they still have some issues there, major issues actually, when it comes to real estate, when it comes to just the government as a whole, but things will get a little bit better. And seeing this $11.8 billion of free cash flow generated in just this quarter is already a huge positive. But of course, although things are going into the right direction right now for China, for the economic participations there, things can go south pretty fast, as we've seen in the past when things were a bit more relaxed. Suddenly, no, let's crack down even more, let's have a bit more lockdowns. So it remains really to be seen what happens there. Take it all with a grain of salt, but right now things are going into the right direction. Alibaba, the business model, is pretty profitable. The business is still growing and it will have a lot of tailwinds going forward. Of course, as we've talked about the risks at the start of this video, take all of this into consideration. Now, let's have a quick look at the graph. So we're here on the weekly chart, and yes, we're just under 90, so at $89. As we can see, we had that little top here, which was already a top back in July 2022, so around $120. Did not make it there, went back under pretty fast, under the 200-day moving average, 20 and 50 as well. Now we're basically here on the weekly chart in no man's land, right? When you look at the MACD, it's still positive, but it's becoming a bit risky there. On the daily, if you look at the daily chart, we're now a bit oversold, not that much, but a bit oversold, so keep that in mind. RSI here is okay, but I've circled here one area, which is the area we're in right now, around $90. In the past, this was one type of support area. Now, of course, as we can see right here in September, that was a support area for a couple of weeks, but then we broke all the way back down to around $63. Are we ever going to go back to $63? Right now, I don't know. It really depends on the overall market situation, the macroeconomic environment, interest rates, tensions between China and the United States. But purely on a graph basis, let's call it, right now we're a bit in no man's land with previous support around $90 that failed once pretty heavily. So overall, to conclude, I know a lot of you do hold Alibaba in your portfolio. I know most of you do know the risk when holding a Chinese stock. But to me, this again is a very good business, a pretty profitable one as well. Of course, it's always being put in that risky category because of the China risk. But overall, to me, this was a good quarter, good projections of what might happen throughout the year as the Chinese economy reopens and recovers. Let's wait and see what happens in the next coming quarters. You will obviously have those easier year-over-year comparisons as well. That should help the stock in the short, but also in the long term. But of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I see you all in the next one. Bye-bye.